Okay, awesome stuff. Welcome once again. Welcome to the International School of Traders. My name is Nubega Mtiana, the CEO and founder of the International School of Traders. Mr. See you on the other side of the withdrawals. That's me. Okay, cool. So on this session, I'm going to be revealing to you what are indicators and how do we look at indicators. This is just an awareness so that you guys may know what are we talking about or what are we dealing about when we are talking about indicators. So if you are ready, I am also ready. Get your pen and paper, get your notebook, your notepad. We are getting started right now. Now, some of the things that I'm going to teach you guys, this is absolutely for free. It is taken from the International School of Traders syllabus, which is the Trading with Discipline Volume 1. It is taken from there. So you guys are getting just a piece of that so that you can get a taste of that so that when you're trading, you can trade with caution, right? Good stuff. Now, let us quickly go into the business of the day. Now, before I get started, guys, please note that any of the things that I'm saying today do not contribute as financial advice. Everything that I'll be showing you guys today is for information purposes and is for your own information. Whatever thing that you are seeing that is going to help you, you can use it at your own risk. And remember, guys, trading Forex is very, very risky and it is not suitable for everyone, and you must use proper risk management. And that is why I teach about risk management on this syllabus. But today it's not about risk management, it's all about the trading indicators. Cool. Now let us get started. So we're going to talk about trading indicators today, and I want us to get to know what are trading indicators today, right? So let's go. Now, just give me a second. Cool. One of the biggest misconceptions and one of the biggest mistakes traders make in their journey and goal to become profitable and consistent is the sole use of indicators. To better understand this, let's define what is an indicator, right? And let us expand from there. What is an indicator? An indicator is a thing that indicates a state or level of something, right? Now, as a synonym, we may talk about measure, gauge, barometer, index, mark, sign, or signal, right? It may give you a little bit of a signal, right? So remember, the word indicator says it's a thing that indicates a state or level of something. So an indicator in the trading perspective is a tool that we use to measure the market, and it indicates what the market is doing currently, is doing either currently or what the market had done in terms of trade, right? With the above being said, many traders rely solely on indicators, not understanding that indicators themselves do not predict the market. They are merely acting as a measurement tool to gauge and confirm what we see in terms of price action. Now, let us discuss the two types of indicators. But before we discuss the leading and the lagging indicators, I just want to say that some of you have a little bit of experience in trading, and you guys have seen some of the people that are trading, showing you some indicators saying, hey guy, if you use this indicator with this, right? If you use this with this, and if this crosses this, it's a buy. If this crosses this, it's a sell. Now, guys, we do not have to rely solely on the usage of indicators. Let me just use this. We do not have to rely solely on the usage of indicators, since they are just measuring what the market is currently doing or what the market had done in terms of price action. So please do not use indicators alone whenever you are trading, right? Good stuff. Now, let's continue. Now we've got two groups, right? The leading indicators and the lagging indicators. Now, a leading indicator, right? Or leading indicators are momentum oscillating indicators or oscillating indicators. Now, these are the indicators that are actively shifting and calculating what price is currently doing based off past data, looking for changes in momentum in buying and selling to identify overbought and oversold situations, indicating a new trend or reversal, right? And as the name suggests, they proactively they are proactive in indicating market changes, which can result in premature entries. And the examples are relative strength index. I spoke about this yesterday at the International School of Traders, which is the relative strength index, and moving average convergence divergence, right? Now, the number two group of indicators is called lagging indicators, right? Lagging indicators are based off or are trend-based indicators, right? These are indicators based of past price action, These indicators try to smooth out the historical events of the market to give you clear picture of what the market has done in comparison to what the market is currently doing, right? And as the name suggests, they are slow to indicate market shifts, and which can result in missed or late market entries. Examples are moving average and Bollinger Bands, right? Now, before we do this exercise, please note, guys, right? On the leading indicators and the lagging indicators, they do have their own disadvantages, right? The leading indicators may give you a signal very, very early. Also in other, the other one, which is the lagging indicator, may give you the signal very, very late, right? Now, the one that I like on the leading indicators is the RSI, which is the relative strength index, and then on the what is this? On the lagging indicators, the one that I like is the moving average, right? And a little bit of Bollinger Bands, right? Depending on the situation, right? Okay, cool stuff. Now, let's talk more, or let's do a little bit of an exercise just to show you how do these indicators look like. And I'm gonna go to the MT4 to show you how they really look like, right? So, okay, let's see this. So these are the leading indicators, right? This is the relative strength index, and this is the moving convergence divergence, which is moving average convergence divergence, which is called the MACD or MACD, right? Cool. So these are the two. How do they really give you the data? How do they really give you a signal? In most cases, right, one would give you two levels on the RSI, right? Let me just give you this. The RSI may have two levels. The overbought level, sorry, I don't know why. Okay, you may have the overbought level, which may be, okay, let me just put it straight now so that you guys can see the way that I want you to see. You may find that the RSI may have two levels, right? This is the first level, which is for overbought situations. And then the second level, which is this one, is going to be for oversold situations, right? Depending on the two levels and how they look, but in most cases, this is how they look like, right? So when markets go, wait, touch here. So according to these, here we were overbought and we should have expected the market to do what? To start selling. And in most cases, or what we saw there is a little bit of a sell, right? The market went up and then this market went up again. So it's overbought once again. And then at the overbought situation, we looked for a sell entry. And this is a sell that came in, right? This is the sell that came in. Okay, cool. This is an overbought situation again. And then this is an overbought situation. A sell came in. And then this is an overbought situation. It's an overbought situation. A sell came in, right? And then this is an oversold situation right here. This is an oversold situation. So we had markets doing what? Changing direction also from here. So these work in that way. And then for the MACD, in most cases, this will be level 0, right? This is level 0. And then above level 0, we will be looking for these gray areas to do what? To cut the median, which is the red line. And when they cut the red line in this specific way, this now represents a new direction, which may indicate a new direction. It's not necessarily giving you a signal. It's just telling you that there might be, or this is an oversold situation. Now, in most cases, when it's overbought, in this case, it's overbought. In an overbought situation, you are going to look for what? A sell. And then in an overbought situation, you're going to look for what? This is an overbought situation. Look for what? Look for a sell. Now here, not even here. Here we had an oversold situation when these gray areas were cutting the red line, and market started changing. And this is what we saw, market changing also here. And then they cutting the median once again. Then when they immediately start to depart from the median, then the change in direction begins to happen, right? So in most cases, I do not like the MACD, right? I do not like the MACD, the way it's been used, the way it's been coded, the way it's supposed to be used. I don't like it, right? I don't like it at all. So I must make that, should tell you about it. And I don't use it at all, right? I don't use the MACD. So if you are a big lover of the MACD, sorry, I don't like the MACD. I prefer the RSI, which is the relative strength index. I think the relative strength index is the one for me that it's really that does the things for me, right? Okay, cool. Now let's continue. Now these were just the leading indicators, right? Now let's move on to the next one now. The next one is going to be the lagging indicators. Now in this case, we have the green bands. If you see the green one, this is the green band. Sorry. This is the green band. This is the green band. This is the green band, right? These three green bands represent one indicator, which is called what? The Bollinger Bands. Now, Bollinger Bands have got three, sorry. So Bollinger Bands will have three bands, right? We've got the upper band, you've got the middle band, and then you've got the what? The lower band. These are the three bands that you are seeing in most cases. And then the market will change direction around these in most cases. Now, in most cases, what they say But most people who love Bollinger Bands, I love Bollinger Bands, but I use them in a certain kind of a way. Let me do this. Now, this is what they say. If the bands are getting closer to each other, they're getting narrower and narrower to each other, right? If you apply them on the chart, they are telling you that there is a big move, or currently there is what? This is just a consolidation for this market, right? The market is still consolidating. Now, the minute they begin to open up or widen up like this, they are simply telling you that now the market is too volatile at the moment, right? The market is too volatile. When they continue, let's say this is what will happen, this is what will happen, and then they come back together once again. As soon as they are close to each other, this is now where the market is now consolidating. Then the minute they start opening again, start opening again, now they're telling you that there is a volatility in the market. So in most cases, if you start seeing this and this, expect a volatile market after that, right? Do expect a volatile market after that, right? Cool. Now, let's move on to the next section, or not the next section. Now, I marked the 3 Bollinger Bands that you are seeing there, and then you've got the 2 moving averages that you are seeing there, right? You've got the red moving average and what? The blue moving averages. Now, this is what most people would say, right? Okay, let me just show you how wrong most people or most traders will use the moving average. So the 2 moving averages that you are seeing now, this is how, in most cases, they would look like, right? Just quickly clear this. Okay, cool. So this is how you'd have the 2 moving averages, the blue and the red one. So let's say this is the blue one. This is what? The red one. Now, in most cases, this is how they say, trade using the moving average. They say, when this crosses this one, right? When this crosses this one like this, now this is a signal to say buy. And then they say, if this one cross this one again, this manner, they will say this is a sell situation, right? They say sell here, buy here, right? And remember, these are lagging indicators, right? These are lagging indicators. They shouldn't be used in such a manner, right? They shouldn't be used in such a manner. They should be used with they shouldn't be used in such a manner where you are saying you are buying when this one crosses this one, you are selling when this one crosses this one. That is the wrong way of using these indicators, okay? That is the wrong way. The right way is to understand that these are lagging indicators. You need to find an entry before the thing happens or after the thing has happened using price action, right? Do you know where the volatility or move bearish, or we just have to be based on price action? In most cases, we can know. In most cases, we can know, Lindy. Now, because this is a free session, especially on Bollinger Bands, there is something that I had to explain, right? In most cases, I don't explain it. Because you're asking it here, let me explain it, right? Let me explain it. Now, on the Bollinger Bands, right? Okay, I'm gonna explain this when I start seeing the chart, guys. Let me continue with my program. First, let me finish my program first. Okay, cool. So the two moving averages should be used, or excuse, when you are using them in that manner, please note or expect the market to bend you a little bit, right? To bend you a little bit. So in this particular case, we are having markets crossing each other here. But to be frank with you, or to be honest with you, this will cross the other one when the market is already maybe here, right? And there's, so it starts entering a sell here, whereas we took a sell maybe up there to this one. So meaning if the market changes direction from here, you are more at risk than me, right? Cool. And then in this particular situation, in most cases, because these are lagging indicators, they will indicate this when the market is already changed direction. In most cases, you'll take the buy here, and then the market goes down. Now, this is on a daily time frame, guys. When I took this one, this was in a daily time frame, and then this changes direction. You are gone on your small account, right? So do not blow your small account trying to use the moving averages, right? Yeah. I'm gonna show you today. I'm gonna show you how to use the moving averages. Gabelo, I can see your hand, and Tabang, I can see your hand. I think you guys raised your hand. I can see your hand. I'm gonna take your questions down on the comments, right? Cool. Let me just lower your hands. Lower your hands. Now, okay, cool. So I'm gonna take your questions on the comments, right? Okay, cool. I'm gonna show you how to use moving averages correctly, okay? Okay? Okay. On the actual chart. And I'm gonna give you some of the moving averages that you're going to use from here. Okay? Chapeau. Let's move. Now, these guys, some of you just spend money on scammers, right? And I don't like that. So what I'm about to show you, somebody was selling it for 12,000 rand. Somebody was selling it for 12,000 rand out there. So let me just show you. They would combine all these indicators, right? They'll combine all of them and say, if this one crosses this one, and now the Bollinger Bands are doing this, and this MACD is doing this, and this is doing this, which is absolutely nonsense, right? This is sometimes these moving averages do not go hand in hand, right? So that is why in most cases, I didn't say anything. In the comments, I didn't say anything. Now, the thing is that what I like, right? What I like is that this video won't show the comments when it's recorded. But I'm not gonna say names. Yeah, there's a lot of people actually selling it. You guys love scammers. You guys love scammers. You guys fall in love with scammers every day, every day, every day. Oh, not me. Ouch. Hey, Joe, look at the car this guy is driving. Hey, these people hire cars and shoot videos so that you will pay. Buy the strategy is 12,000 rand. Okay, cool. Let's forget about that. Let's continue. So This is what in most cases, or what other people will call a little bit of a strategy, right? Or strategy, right? Now, for those who are coming on the Nasdaq strategy this coming Saturday, right? I'm going to be hosting a conference like this one. Where I'm going to be going deeper in terms of, I'll be doing the same, not the same thing, but I'll be giving you details on the strategy on how to use it. I'm going to give you a little bit of insight on how to trade the Nasdaq, right? Trade the Nasdaq like, not like a Mambara, but like an experienced trader. Okay, cool. So let's go. Oh, damn, just give me a second. Okay, sorry about that, guys. This it's 9 o'clock, guys. Don't expect me to act polite and stuff. 9 o'clock. Okay, cool. Let's continue. So, most people. Okay, so okay. So in front of you guys are seeing the new age kind of indicators, the customized indicators. This is what I give mostly to everybody at the International School of Traders to say, this is what you guys have. Now, also you do not use this solely even if you are at the International School of Traders, but at least you have the harmonic scanner, which is the software that scans and tells you at good times to sell, especially here, it was a good time to sell, and then at good times to buy. This right here was a good time to buy, right? And then remember that that's MACD, MACD that you saw. In this particular case, we are having this. We're having something that will change color to give you, a red color to say that we are now in a new direction, which is a sell direction. And then the other one would be the moving average, which is, magic moving average. And this moving average changes color every time the market is mostly changing direction. Now, now that I've taught you all of these things, guys, now I'm going to go and do practicals and show you the indicators that I am using, especially on a daily time frame. I know some of you do not like indicators, right? But I'm going to show you these indicators the way they are looking. I think most of you have seen this, but I'm going to show you. Okay, I'm going to take one setup for an example, Euro USD, right? Okay. So let's do this. Let's choose a clean chart. Chart. Okay. Now we are having a beautiful chart here, which is the Euro USD chart, right? It's a clean chart. It's a clean chart on the daily time frame. Now, I'm gonna put in 3 moving averages, right, on a daily time frame that I use to measure the market. I'm going to show you how I use them, but it's 3 moving averages. You can use them on your phone, but preferably on your PC, right? Preferably on PC. Okay. Now, I shared this with the International School of Traders yesterday. Even went into details and everything. Now, the first one is going to be so all of them are the daily moving averages, meaning you apply them on a daily time frame. So if you are here right now, just go click on your navigator, or maybe if not indicate navigator, just right click anywhere on your chart and then select not indicators, or just select insect indicators and go to a trend and select moving average. Now, the first one, you can make it line and then make the period 50, and then the moving average here is going to be simple. The MA method is going to be simple. Go to visualization and deselect all time frames and only select daily time frame, right? Cool. Now you have everything that you need. Select OK, right? And then let me explain just this one first. Just this one moving average first. Now, if you just go back in time, right? I explained this yesterday at the International School of Traders that look, in most cases, in 2018, in 2019, to be very specific, I used the 50-day moving average to spot some sell entries on Euro USD. I already knew the market is in a bearish market. Then I started using the 50-day moving average as my resistance area, right? As my resistance area. I sold here, probably sold here, at this point also. And I remember there was a sell somewhere, but this one also is another one. And this cycle ended around June 2020, right? But it's cool. So this is something that is very powerful, and it is on a daily time frame, meaning it can give you a little bit of confidence when you are trading, right? To say long term or for the next couple of days, we are going to be doing what? Holding this trade, which is a sell in this direction here. Let me change color. In this direction here, this direction here, this direction here, and also in this direction here, right? Which is cool, right? Cool. Now that is the first one. Can you please use 15-minute chat? No. These ones are daily moving averages. These are not for scalping. These are for building, for holding a little bit, for a couple of days, right? These are for building your account. So not on a 15-minute chart, but daily time frame. So these are daily moving averages. Okay, let's go. Let's change one. Or not change another one, let's add another one. So insect indicators, insect indicators, insect indicators, trend moving average. Now the next moving average that we are going to be adding is going to be period 100. Period should be 100, and then the color just make it red. And then the method, MA method should be at symbol, apply to close, and then levels, nothing. The visualization, change to do what? To be on a daily time frame. Boom. Now, even if you are a day trader on this one, guys, it would help you. If you're a scalper, just look at the overall market structure and start trading, right? And then the last one that I'm going to be adding, insert indicators, trend, average, perimeters should be 200 at period, and then change this one to gold. Make it gold, the color or the style. The MA method should be simple, apply to close, and then go to visualization, deselect all time frames, and select daily time frame. So, this is the last one, right? So, these are the 3 moving averages. Please, guys, this is not a Christmas tree, okay? This is not a Christmas tree. These are just 3 moving averages, right? Now, this is how we're going to be doing it. It's how we're going to be trading this. This is how I traded them in 2019. So if this happens, this is a much more beautiful confirmation, but make the green one to be a minor, or just tell yourself this is a minor resistance at a bearish market. This is a minor resistance. This is more of a mild resistance, which is the red one. And then the gold one should be, or which is the 200-day, should be your major resistance in this particular case, right? So if you just look at this one, it's just your major resistance, right? So even in this particular case right here, as we were selling, also selling here and around here, this is very beautiful. Now this right here would have confused a lot of people, but this would have been a beautiful entry at this market, right? Beautiful entry towards the sell. Now, obviously, this is called Corona price. This is called Corona, right? Cool. Those are the 3 moving averages. Remember to make the gold one. Tell yourself the gold one is the major resistance. The red one is the mild resistance, and the green one is the minor resistance. That is on a bearish market. That is a bearish market, right? Now, not all markets are going to respond to the same setup, but in most cases, some currencies, in most currencies, guys, are going to respond to this, right? So now I want you to go ahead and save this template, right? Save this template to just right click anywhere on your chart and select template and save this template and just name them D1, meaning D1 SMAs, D1 SMAs, right? D1 SMAs. Now, you're gonna know that anytime, now that you have that template, maybe if you're opening a USD CHF chart on a daily time frame, then you change a template, you wanna see the market in that same way that we discussed, then I select your, just right click anywhere on your chart, select template, and then select your D1 SMAs. When you select your D1 SMAs, this is what you will see. So on USD right now, right? On USD right now, because we are having the green, which is the 50 above, and we're also the red in the middle and the gold below, this is still showing some signs of what? Of a bullish market, right? This is showing some signs of a bullish market. But if this market fails to hold above these moving averages, this is now going to become a what? A sell from here towards the downside, right? Now that the market is below these moving averages, we can start using them as resistant areas. If the market is above the moving averages, use them as support areas, right? So here market was below these moving averages, use them as a resistance, start selling, sell. Well, here this was a Maraba start trading or whatever situation here. Guys, if you're from Maraba start, please don't hate me. I'm just kidding. And then this right here was now a buy situation. But now this buy situation is going to be determined by how this trade was set up, holds below or above these areas, right? Okay, cool. Now, those are the three moving averages that I would like you to use and incorporate them on your trading. Use them on a daily time frame, and in most cases, use them as resistance or support, depending on the type of the market. And do enjoy trading using them, right? Cool. I use them. You can use them on USD on any of the charts or on a daily time frame, especially currencies. And if the currency is responding well to them, then you are going to be on the trade, right? It's going to give you perfect idea of what the market is doing, right? Cool stuff. Now, before I close this session, I'm gonna close this session. I just wanna stop the recording, right? If you're seeing this on our YouTube channel, thank you so much. Like this video and subscribe to the channel. We love you so much, and we will see you on the other side of the video, right? Have a beautiful one. Shalom.